Good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to webinar on LinTRA and our past to open discussion about intraday trading systems and system performance, right? And before getting into the session, just give me a quick audio and video confirmation, like is things are going good, the audio quality is good, so that we can start with the session. You can raise your hands or you can send in the chat message. Okay, thanks. Thanks, guys. Audio and screen are good. Okay, great. Thank you. Thank you. So we are having a full audience today, and a little bit about me. Before getting to that, standard disclaimer. So future trading contains substantial risk, and it is not suitable for every investor. And the investor could potentially lose all or more than initial investments. Risk capital is the money that can be lost without jeopardizing one's financial security or lifestyle. Only consider risk capital that could be used for trading, and only those with sufficient risk capital should be considered trading. And past performance is not necessarily indicative of future results, right? So a little bit about me. I'm the founder of Market Calls. I'm writing in Market Calls since 2007. We are almost a 9 years old blog now, and I'm a full-time trader by profession, and my core expertise with building systems, designing trading models, timing models, algos. I'm more interested in building trading analytics. My recent research is on trading sentiment analysis, especially in stock markets, and my core expertise is with trading index futures and options, right? And I'm also a discretionary trader, right? So last almost an year, I am experimenting with a lot of my discretionary skills using market profile. And if you want to know more about me, you can go to marketcalls.in/about, and you can able to get more details about me and my website, right? And so today's discussion is about intraday trading, right? So just put some few slides about what are the advantages of intraday trading or disadvantage of intraday trading. The advantages are not much. Intraday trading is one of the toughest trading subject in the world, right? And so we have very few advantages here. One of the fair advantages, there is no overnight risk, so you don't need to worry about big gap ups or big gap downs, and you don't need to worry about aftermarket news, global sentiments, fundamentals, right? So especially if you want to sleep at night with peace, right? Then you come to the market without any positions, and you go home without holding any trades by carry forwarding, right? And disadvantages are enormous. Too many disadvantages here when it comes to trading pure intraday, right? So especially the very first disadvantage is high leverage kills. Most of the traders here in the market, especially the one who are coming with the new and even most of the experienced traders, they use high leverage to generate enormous returns, right? So you can generate enormous returns, but again, that is an that backfires. Most of the times it backfires a trader. It kills a trader again and again and again. So constantly trader comes with fresh money, they trade with high leverage to generate huge returns, and then they eventually burn their fingers in the markets, right? And it requires constant monitoring, so you cannot move out of when you're holding your positions. You cannot just like that, you cannot move out, and then you cannot go back, and you cannot come back, and you cannot benefit from big gap ups or big gap down openings, right? Especially if you're an positional trader, probably if there are times a gap up or gap downs can benefit an positional trader, thereby generating enormous returns, whereas an intraday trader cannot benefit from an gap ups or gap down openings. And news generated intraday volatility news generated intraday volatility is really tough to handle, especially whatever the trading mechanism you are using, whether you are using mathematical models, classical indicators, or any kind of trading tools you are going to use. News generated mathematical models, news generated mathematical tools are quite beyond the scope of what I want to say is the volatility is beyond the scope of mathematical tools or classical indicators, and no one can predict such intraday volatility movement. It's really tough to handle, either mathematically or mentally, right? Either way, it's tough to handle, and that is where it is a challenging phase, especially if you are an pure intraday trading. If you are trading purely based on intraday trading stuff, and news-based generated volatility is going to come, and it's going to take away most of the moves against you, right? And it requires low-cost discount brokerage solutions. Probably this sort of intraday trading stuff, right? Probably if you are trading at least 3 to 4 trades in a day, then you have to reduce your trading cost. Where trading cost is going to play a major role, especially if you are going to be if you're going to take 4 to 5 transactions, intraday transactions per day or even more, then you have to reduce your trading cost, right? So essentially you have to operate with low cost discount brokers, and you cannot operate with prime brokers. That is one of the major disadvantages when it comes to intraday trading. And so we also look into how most of the day traders trade, right? So if you look at the overall landscape, when right from the new traders to the professional traders, many new traders adapt the same strategies over a period of time, again and again and again. So last almost 9 years I was talking with the traders, various kind of traders, but if you look into any kind of new traders and some 1 or 2, 3, 4 years experienced traders, they are very much obsessed with the very classical tools like trendline breakouts, EMA crossovers, and classical technical indicators, Fibonacci ratios, pivot points, GANs, and other kind of traders. They used to trade based on news, rumors, global sentiments, earning results, corporate announcements, right? So this is what the majority of intraday traders fits in, and even most of the positional traders also fits in this style. So basically they look for some sort of a breakouts, and eventually their trading behavior is quite predictable. Predictable in the sense they are highly leveraged, right? So these traders are highly leveraged, and so they cannot keep their stop loss beyond certain limit. Probably if you are trading Nifty futures or Bank Nifty futures, if it is a Nifty futures, right? If you are highly leveraged, let's say I am highly leveraged, then I cannot take an 30 point beyond 30 points or 40 point stop loss in my portfolio, especially if I am trading with Nifty futures, right? So if everyone is going to trade in such a way, so every trader's stop loss is going to be very much predictable. Probably they cannot, if they are an intraday trader, then their stop loss would be somewhere between 30 to 40, 50 points. It cannot be more beyond that because of the tight leverage where the traders are playing in. A tight leverage, which what I mean is probably if you are trading with some 5 lakhs of Nifty with just 1 lakh of money or 1.5 lakh of money, then probably you are tightly leveraged, right? So, or let's say you are trading 1 lot for every 2 lakhs of money, then I would say like your leverage is very low. Probably you are using the right leverage, right? And so their trading behavior is very much predictable. Not everyone is going to act the same way at the same time, and everyone is going to place the same stop loss, and more or less their stop loss is predictable. The crowd, the intraday trading crowd who is going to place the stop is more or less predictable, right? And that is where most of the traders are getting backfired with mechanisms like stop hunting in the markets. If you want to know about stop hunting is a scenario where the weak players are getting removed by the strong players, right? So they eventually remove the weak players from the markets just by hitting their stops. I had done an article about that. Maybe I could share you after this workshop, right? And but think about professional day traders, right? How they do compared to the new buy traders. Professional day traders have a trading process, right? They record their tradings, they record their trades, emotions, where they are making a mistake. They record each and everything. Whereas a normal day trader, right, and a new trader or an 1 or 2, 3 years of experience trader, they talk only about their profits. They don't remember their last losses and why they had made. They feel shy to talk about their losses. Whereas professional day traders, they do lose, but they never fail to talk about their failed trades, why it had failed. So they have a track record of what kind of failure, why it happened. So by doing and recording such trades and emotions, right? So they'll be able to overcome in their next situation when they are facing an when they are facing a similar situation next time. Probably they could play a different game, or they could play a better game compared to an beginners in intraday trading, right? And they prepare for the trading day, right? They every day they used to prepare for the day, and then they will come up with various scenarios like how the day trading could be, what kind of day we are in, and what kind of trend we are in, right? Whether the trend is young or old. And this is where the normal traders lack skills. They just watch the charts and they will immediately jump into the conclusion whether to buy or sell. Where is my support? Where is my resistance? Right? This is what the normal retail traders play. They want to know where is my support, where is my resistance, where is my stop loss, where is my entry point, where is my exit point, right? This is what a typical day trader cares about. Whereas a professional trader cares about what is his trading process, when he is going to come out of the trade, and what is the money allocation I have to take for a particular trade. Is this trade is risky or not, right? So he eventually prepares for the day before getting into the trades. Before preparing for the day, in a sense, before the market is going to open, probably by 8 o'clock or 8:30 or 9 o'clock, he will prepare that particular day. So he will run some mental process, and then he'll come up with a solid trading plan or some trading system, and he never uses too much of leverage, right? And he understands the reality of the markets. Whereas many traders, I have spoken to a variety of day traders, their experience, their expectation from the market is very huge. Probably their expectation is they want to make 10% returns in a month, or they want to make 5,000 rupees in a day or 3,000 rupees in a day, right? So these are unrealistic expectations. What control you have from the market is you don't have any control in the markets on your return part, right? You can only control your risk. I would say not even controlling your risk. You can only manage your risk by putting a stop loss, or by following a process, or by following a set of rules and regulations, right? And this is where the new trader lacks his skill. So eventually he ends up trading something which he don't want to trade for that day. Suddenly he sees some news announcement coming into the channels, some rumors coming in WhatsApp, and finally he ends up trading something which is not part of his plan at all. Probably he would have thought in the morning, like I want to trade Nifty futures. Probably he end up trading something else like Indus Bank because some news had arrived, or some other news in Arkham because Arkham news had arrived, and the charts are looking very good, right? So immediately he looks into the charts and he looks into his indicators, and then he quickly jumped into the conclusions. And that's where a professional trader differentiates from the new traders, right? And when it comes to systems, right? So systems, you need to have a solid game plan. What kind of system you are going to use, and what kind of risk it is going to possess, right? As I said, you don't have any control over the returns. Returns is depend upon market volatility and the the trending nature of the markets. If the market itself not going to trend, then what is the point of getting in returns from the markets, right? So again, avoids over trading. Whereas if you take any normal traders, any new buy traders, their plan would be to make 1 or 2 trades in a day, but eventually they would end up doing some 5 to 10 trades or 20 trades, which is not even they plan to do it, but they constantly keep on trading something which because they want to trade, and then it is like marijuana for them, right? It will be a kind of an addiction. You cannot control yourself from trading in such a unexperienced traders. They cannot control themselves to trade, so they keep on trading. And a professional day traders should avoid over trading. If you want to be a professional day trader, you should limit your number of trades. Probably if you are trading only Nifty futures or Bank Nifty futures, probably you have to limit yourself to do not more than 1 or 3 trades, 2 or 3 trades max to max, right? Or you have to understand what kind of time frame trader you are, whether you are trading what kind of charts, whether you are trading in range bar charts or you're trading 5-minute charts. So is this number of trading acceptable or not, 4 to 5 trades in a day, or you want to go beyond that, right? The more you trade, it adds more to the slippages, more taxes, more brokerage, and eventually that kills your trading system. Maybe we'll look at some of the scenario from LinTRA, right? So that will give you a better guide about what kind of brokerage or what kind of taxes we incur over a period of time, probably some 5-6 years period of time, right? And they invest in quality trading tools. They don't believe in this illegal tools or illegal stuff or cheap tools. Better try to find some quality charting or trading tools, right? So what is LinTRA? LinTRA is a linear regression based intraday trading system. That's what we are going to discuss throughout the rest of the session. And it is an intraday trading system which is designed to trade only high volatile scripts. So eventually it is not designed for Nifty futures. Probably it suits for stocks like high beta stocks, right, where the intraday volatility is very high. And when it comes to index, the Bank Nifty is considered one of the high volatile scripts. So it is applicable to trade high volatile scripts like Bank Nifty. And it is simple. The strategy is simple. The edge is not with the strategy. The edge is with the execution mechanism, right? It's a very simple strategy. Anyways, I'll go through the strategy. And here is a strategy here, right? So you can find here there are volatility channels over here. There are 2 volatility channels here. The one at the top is the green one, which is the top channel and bottom channel are based on LinTRA linear regression based volatility channels, right? So, and whenever the candle is crossing, if the close of the candle is going to cross, it generates a green candle, right? Means the candle is above the channel, and if the low of the channel is going to touch, right? If the low of the channel is going to touch, then the candle automatically turns red here. So you can see here this case, it is generating red. Whereas it doesn't generate signal unless the high or low of that specific candle has been taken out. For example, let me take this case on October 7th, right? On October 7th, the very first attempt, the candle closed around 10 o'clock above the top of the channel, and the candle becomes green. And then what we'll be looking for is, we don't go for an immediate buy. We don't go for an immediate buy. We'll look for that high to be taken out, right? So that high to be taken out. So this is where we'll place our limit orders. So immediately we'll place our limit orders at this reference levels. So this is our reference level, and we'll place the limit orders. And once it is taken out, so probably if it is not taken out, there won't be any trade for that day. So in this case, there is no or further price movement above this high, right? This high was around this high was somewhere around 19540. On that day, that high was not taken out, so no trade was done for that day, right? Whereas you think about this scenario, the candle turns red over here, right? Because it touched the lower end of the channel, and then the next candle it takes the low of the candle. So immediately once it taken, so this low is your reference point. So this low is your reference point. That is somewhere around 19580, right? So once this low is taken out, low is taken out, this is where you are supposed to place the limit order. Once the limit order is touched, means once the candle is touched intraday, the signals will arrive in real time, right? This is where the execution mechanism differs from most of the trading systems. Most of the trading systems will look for the close of the bar, or it will wait for the next bar to open, so that we will eventually have to go and punch some market orders. By punching the market orders, we'll be end up taking either at the bid or the ask price. Whereas our trading system will be, we'll say at you have to buy at the next bar close or next bar open or the current bar close. By doing so, right, so we incur slippages. We incur slippages, nothing but an extra cost, right? If you want to take the price right now from the market, you have to put a limit. You have to put a market order, right? By putting a market order, you incur slippages. Probably your trading system will say like the buy comes at 19580, but eventually once you started placing your market order when the market was at 19580, market would have moved little bit up, or market would have given you an additional price. Probably you are not able to execute at 580. Once you put the market order, it will execute at what the market is trading at that time. Probably it may move to 19588, probably some 5, 6, 7 points higher from the time you place your orders, right? So generally placing the orders, it may comes around 2 or 3 seconds at least. Once you visualize that signal has arrived and immediately you want to place the order, it will take quite some time to place the order, right? So that challenge we overcome in this system by putting a limit order. So we will by converting the execution mechanisms completely into pre-alert mechanisms. The pre-alert mechanism, in the sense, maybe I will try to show you some examples. So you take this example, right? So in this example, the candle touched the lower end of the channel and it turns negative, right? So immediately you can see here the alerts have started coming in. You get ready to short below 19513. So once the 19513 taken out intraday, or once you've seen this alert, probably one have to place the limit order, right? So if that 1953 is touched again by the next subsequent candle, then immediately that also means that your limit order also got executed, and at the same time during the real time you get the signals arrive. You can see the signals coming into the screen, right? By doing so, we are not executing at the ask price or the bid price. In this scenario, we are putting a limit order, so we are able to execute at what price we want to execute, right? If the limit order is not touched, probably when the market is again reversing without touching it, there won't be any signal for that day, and we have to cancel the limit order, and we have to move on to the next instructions which is coming from the dashboard. So such instructions will be coming on the dashboard. The dashboard tracks what is the buy reference, what is the current profit and loss running on, and what is the instructions supposed to be you have to do. So if it says get ready to short below 19513, then probably you have to put an sell limit order at 19513. By doing so, we'll be able to uh, uh, avoid slippages most of the times, right? So I'm not saying that you cannot avoid your slippages completely. There are few trades where the execution might be way faster. It could skip those limit order zones. Probably if you take out of 1,000 trades, maybe 3-4 trades would have skipped those zone, and because of high volatility nature, market would have skipped, right? So maybe I'll try to give an example how it can be skipped. So coming back to the point, so we generally use LinTRA in 5-minute charts, and the trading decisions are taken in real time. So instead, rather than waiting for the bar to close or next bar to open, there is no such stuff. And LinTRA doesn't has any trailing stop loss. LinTRA doesn't has any trailing stop loss, and the next signal depends upon whether it is closing below the channel. Let's say you're running longs, and immediately it is turning down below the low of the channel, and then that low got broken out, then only you will get an exit signal. So unless the low is not broken out, exit signal will never arrive to the system, right? And when it comes to intraday trading, again the entry trades is at 9:30 a.m. Probably before 9:30 a.m. it will not deliver any signals, right? So it will be in a wait mode, and whatever the positions are open, it will be closed by 3 p.m. by the system. So no positions are eventually carry forward for the next day. And a green up arrow represents a buy signal, a green star represents exit buy positions. Probably I can show here. So here the red represents the shorts, right? This is a fresh short, and the star represents an exit signal. Probably you can see a star most of the time, especially during 3:15, right? It's 3 o'clock is where all the position gets squared off. So 3 o'clock is where you see a star, and if you are seeing both red arrow and a star, it means you close your previous short. So the previous short was running, so you close your previous short, and you get into the longs again. So it means you switch from short to longs, right? So it is an it's a reversal of your positions, basically. That's what it means. And again here the longs came around October 7th. Long was running on, right? It tries to close below the channel. It haven't closed it, so the green color candlestick was continuing, right? And you can see here the exit signal came over here, right? And again, very next day markets, the very next day signal is quite different from the previous signal. So previous days it closes above the candle, right? It closes above the candle, and then it also broken out that high as well. The high of the first candle has been broken out, and then it delivers a signal. Whereas if you look at the next day, it's slightly different. It was still above the channel, right? So there is no so once the market opens, market is opened above the previous day's channel. It was still above the upper layer of the channel, and then it will monitor the positions for first 3 bars, right? It monitors the position for first 3 bars, and then it places the limit order at the 3rd bar high, right? It places at the 3rd bar high. Once it broke the 3rd bar high, so once the 3 bars had formed, immediately you can see in the dashboard that you can see that what to do, what kind of instructions you have to do. It will be arrived in your dashboard, and once that high has been taken out, immediately you will see that arrows, green color arrows coming on your screen, right? And then again on October 10th. It reversed again around 10 o'clock, again reversed, and throughout the day it continues negative for that day, right? So this is LNT charts. Probably I can show you a demo of how it works, right? So maybe I'll try to take AMI broker. Okay, I'll try to take any broker. Let me connect with the database. So this is today's signal. Probably I'll try to move through today's signal. So there is a function called a bar replay. You can use this function. So to simulate today's movement, right? I'll add a little bit of speed. 5 minutes. Let it be 1 minute, and speed is 5. So you can see here the today's. Probably should put 11 over here. Yeah, so you can see here. Maybe I'll move a little bit backward. So before this signal arrives, right? So before the signal arrives, you can see in the dashboard here, get ready to buy above 19539, right? Or so we have to wait for this entire 3 candles to get completed. So let the candle completes, right? The candle get completed. So immediately, probably before the candle gets completed, you will get an instruction 19545.2. You have to place the limit order, right? So this is where we incur slippages. I'm not saying like this strategy is completely out of slippages. Slippages incur over here, especially when the bar is about to close and you get the instructions. Right, otherwise you'll be seeing and running instructions over there. Well, the bar is not yet completed, so it was waiting for the high to arrive. So once the bar completes, and immediately around when the bar is about to close, you can easily sense that the bar is about to close. So you can find the range. So the range was around 19545.2. You immediately place an limit order, right? And then the limit order got taken out in real time. Right, the bar is not yet closed. The bar is not yet closed. Still, just the bar opened, and it started moving up and up and up. Right, and then you can see the dashboard started tracking the P&L. And let me continue here. Okay, maybe I'll let me stop over here. Yeah. Okay, it's here. So this is where I have, let me stop over here. So once it is showing in red candle, means it is close below or it touched below the lower channel. You will start seeing the red color candle, and you parallelly also see that instructions where you have to place your limit order 19507.1. Right? There is nothing but the low of the candle, and you again keep running the system. So once it is taken out in intraday, probably this bar taken out, right? This bar taken out, and immediately you can see that is your entry point 19507.1. So it pre-guides you to enter your trades. So maybe I'll try to run for the entire day. So it pre-guides you to enter the trading setup. And if it is not hit, right, let's say it is not hit for the entire day, and it moves to the other side, and automatically further instructions will come into your screen. So you can cancel your pre-limit order which you posted previously, and then you can enter into the next limit order. So what is the advantage in doing this sort of trading mechanisms? By doing so, we will be able to control our extra slippages which caused because of the close of the bar. We have to wait for the bar to get closed, right? So whereas we are not waiting for the bar to get closed. Maybe that particular bar would have ended up with a spike. So even here, if it is ending up with a spike, we'll be able to capture those intraday movements. So our limit order would get executed. Even if it is not get executed, we would monitor it and we can make it executed, right? So one way is slippage wise, a lot of slippages will get saved, right? And coming back to the point, I guess you would are now able to understand what kind of trading system it is, right? And let me go to the stuff. So 9:15 there won't be any trades. 9:15 to 9:30 there won't be any trades. 9:15 to 9:30 there won't be any trades. So your trade will be started monitoring by 9:30 onwards. So 9:30 onwards you will be getting an instructions what to do from the dashboard, right? And what are the trades are open, it will be closed by 3 o'clock. So maximum in a day you may get 1 or 2 trades. So very max to max, very rarely you get three trades in a day, especially if the day is going to be very volatile, very choppy, or news events like RBI, which makes the market goes crazy, up and down, up and down. During those phases you may end up trading with more than 2 trades in a day, right? And so let's talk about how your brokerage affects any trading system, not just LinTRA. Let's talk about any trading system. Let's say I'm trading Bank Nifty futures. We'll take a very minimum quantity. The minimum quantity which I have taken is 40 shares, right? That is nothing but the 1 lot of Bank Nifty. And if you are trading using discount brokers like Zerodha or Trade Genie or KSV or SAS Online, probably your brokerage will be around 20 rupees for buying and 20 rupees for selling, and so in that case your break-even point will be 4.15 points, right? So probably if you traded at 20,000 and end up at 20,000, and in such a case your after all the expenses apart from brokerage, taxes, turnover charges, right, you'll be paying 166 rupees, including taxes, including brokerage, including turnover charges, right? So this is nothing but you're making an 16 lakh worth of turnover, right? 16 lakh worth of turnover, and you're paying an 166 rupees just as your trading fees. The trading fees involves brokerage and exchange charges, SEBI charges, all the charges included, right? So this is the split up of the charges over here, right? So all the split up of the charges has been included over here. So on top of your turnover, on top of the turnover, if it is 166 rupees, that is approximately 0.01% of the brokerage. 0.01% of the brokerage. So what I had done, so I had taken a brokerage as 0.01%, so which includes brokerages and taxes, and I taken a backtesting period from October 2010 to May 2016. This is pure intraday data, right, using 1 minute data. So I taken an initial capital of 2 lakhs capital to trade 1 lot of Bank Nifty, right? So I'll tell you why I'm taking in 2 lakhs of capital to trade 1 lot of Bank Nifty, right? Eventually you need just 50,000 to trade 1 lot of Bank Nifty, and when comes to intraday, probably you can use MAS orders or bracket orders, and you can even get extreme exotic leverages, right? But that is not a professional game play, or you understand what kind of risk you are taking, right? When you are coming to trading with systems, probably capital allocation plays a major role here, right? So in this case, I've taken 2 lakhs of capital. I'll explain you why in upcoming slides. And so let's say we'll take a simple model portfolio of 40 shares, and we are just going to play with only 1 lot with just 2 lakhs of capital, right? And in such a scenario, maybe I would have tried to take a live back test, right? I'll try to take a live back test. I'll move on to index data. So this index data is right from 2010 onwards, right? So 16/8/2010 till May end, right? So May end. So let me try to backtest here, and here I'm just putting the conditions like maybe okay. I'll take just only 40 shares, and You can control when you want to enter, when you want to exit, what is your market start time, right? That you can have a complete control over there. And even you can switch your position from intraday or positional. You can control the system in two ways. If you want to trade intraday, you can trade intraday, or if you want to go positional, you can go positional, right? So let's do the back test. So one other setting you have to do is you have to go to the information settings and you have to set the round lot size and your margin deposit. Typically your margin deposit depends upon your broker. Generally they offer a margin deposit of around -8%. I mean 8% to 10% brokerage. In case of stocks it can even move up to 12.5%, and in certain stocks, right, if it is if the VAR margin is increasing, probably it can go even to 25% also. It depends upon stocks, and generally indices you can able to trade at 8 to 10% margin deposit, and this ideally depends upon the broker's margin, right? So let's do a back test from 2010, right? 1/10/2010 to complete back test. So let's do this back test. Right. So what kind of just by trading one lot. So every trade, you can see here the number of trades got generated when the system went long, when the system went short, right? Everything is captured, and you can see here it eventually ends up by 3 o'clock or before 3 o'clock it closes all its position, and you can see here every time it was keep on taking 40 trades, 40 shares. That is just one lot of trade every time, right? So by doing so, if you are using softwares like Broker or NinjaTrader, you can do such backtesting. You can write your rules, when to buy, when to sell, when to short, and when to cover, and you can backtest the scenario. So you can take the back data and you can backtest it, and you'll be able to get the how the system behaved in the past, right? That's what you can get it from there. And you see here there are total 3,731 trades. It ended up with 3,731 trades, and it had generated and compounded a CAGR of 28.4. I'm sorry, I think the brokerage settings is wrong over here. So the brokerage settings is 0.01, right? So 0.01 and so 0.01, and probably the length is not set over here. It's supposed to be 100. This is what the default settings which we used to do for LinTRA backtest. Right, so the total 2,954 trades. The winning ratio is 43%. Means for every 100 trades, only 43 trades are winning trades. Right, so this is a standard. If your trading system is based upon some sort of a mean reversion or a trend following, you are at the lower time frame. Means in my case, I'm using a 5-minute time frame, right? 5-minute time frame, whereas I can use in any time frame. But most of our trading systems which we design are with respect to 5-minute time frames, because that's we feel it is an ideal time frame to do an intraday trading, right? So by doing so, it generated 2,954 trades and a compounded annual returns of 37.21%, right? It is in compounded numbers, whereas if you want in absolute numbers, the absolute numbers is somewhere around close to 500%. And you can see here, it is just it's losing 56% of the times. The trading system is losing 56% of the times, and it's winning only 43% of the times. But still, because of the risk-rewarding nature, right? It is if it is winning 100 points and it is losing only 30-40 points in every trade. So by doing this, keep on doing this again and again and again, the system is able to generate returns. And if you look at the risk part, right? The risk part says at some point of time there are 14 consecutive losses. At some point of time there are 14 continuous losses in a row. Means you keep on losing for 14 times in a row, right? And that has happened, and typically a normal trader cannot accept this 14 continuous losses. Probably if they are handling such 14 continuous losses, they will at some point of time they will wind up saying that, boss, this system is not for me, so let me quit and let me look out for some other trading system, right? So but still it is able to continue with this this journey, and you can see here the equity curve moved from 2 lakhs to 1.1 11 lakhs, 11.97 lakhs, right? And still the journey is not smooth. It looks like it's smooth, but it is not actually smooth. Maybe I'll try to explain you why, right? So it looks like a very low risk trading system, but I'll try to explain what is the risk involved in such scenarios, right? Maybe we look into the more risk parameters. One of the risk parameters we'll watch is the maximum system drawdown. Maximum system drawdown. It says at some point of time you had lost after a sequence of trades. Your money is keep on growing, and at some point of time it had lost 92,903. Right? That is 18.78% of your portfolio at that time. Probably maybe from this scenario I can say here somewhere around probably here, right? So from 10 lakhs it would have dropped some 1.1 lakhs, it would have dropped some 1 lakh of money. So this is where the maximum losses occurred. That is nothing but around 19% of your portfolio. So if you are trading, if you have started somewhere here, then probably you are lucky. You made money, and your money would have grown from 2 lakhs to 10 lakhs, and then from there you lost a lakh, right? Let us assume that you started at the worst scenario. You started at the worst scenario. You started with 2 lakhs here instead of starting over here, right? So you started somewhere in the start of the 2015, and you are starting right away at the exact worst case. Now, what you can expect is a maximum loss of 92,000 rupees. Means out of your 2 lakhs, you would have lost 92,903, and still you'll be having 1.1 lakhs in your hand, and but still you'll be able to trade, right? So, but the only thing is such losses are mentally not acceptable, right? This is the risk involved in any trading system. So, maximum system drawdown tells you about what kind of risk is involved in any kind of trading system, right? This is with this. In this case, I'm assuming that my brokerage is 0.01, including of all taxes. I'm not considering any slippages. Let's say if I'm considering my slippage, right? If I'm considering my slippage, if I put my, let's say I'm going to incur my additional slippage, which is going to add up to my cost of, let's say 0.02 or 0.03, right? Let's say 0.03. Let me put 0.03. Then your risk, you can see the risk parameters. Your drawdown, your annual return declines from 37 to 20.64, right? And your drawdown increased from 90,000 to 1.25 lakhs, right? Now, at some point of time, this sort of risk is inevitable in such kind of scenario. So your drawdown curve becomes something like this. It's not smooth, right? It is not smooth, and because of slippage. This is just because of slippage. If you're going to have a 0.03% of taxes and slippages, then that is going to be the scenario. If it is 0.02, this is 0.02, right? This is 0.02. This is 0.02% of brokerage. So it will be slightly smoother. Right? It will be slightly smoother, and 0.01 is ultra smoother. This is the ideal scenario. This is not the realistic scenario. This is the idealistic scenario. The theoretical values, you can say that. Right? So this is the theoretical value. You can say that it's nice, clean, smooth, looks slow, risky, but that is where the LinTRA comes in saving most of the slippages. If the slippage is going to increase marginally by 1.02, you have a drastic decline in your performance automatically, right? You can see here now. You can see a lot of speed bumps comes over here. You're able to see the money makes money, again drops down, makes money, drops down, makes money, again drops down. Right now, even the maximum system drawdown it went from 18% to 20% here. Let's say you are with some other premium broker, and you are after your brokerage taxes, your total commission comes around 0.05%, right? So what happens to the system? System is gone. The system is gone. It's not making money here, right? So it loses some money, and again made money, and again lost most of its money. So when you're trading such systems, especially at a 5-minute time frame, or if you're a 5-minute trader, then probably you should worry about your brokerage and transactions, especially if you are going to be very systematic, right? So you have to worry about your brokerage. Your brokerage plays a major role, and not just brokerage, your slippages, brokerages, taxes, everything is going to play a major role. So I taken a snapshot here to compare how it happens, right? So I taken a 0.01% and 0.02, 0.03, and 0.05. So LinTRA can handle a maximum of 0.03% of your transaction charges, slippages, brokerage, everything included can go up to 0.03%. A 0.03% in the sense when it comes to Bank Nifty, right? When it comes to Bank Nifty, for one lot, let's say 166 rupees for both buy and sell transaction. This is just brokerage and slippage count. Whereas if you take 0.03, you have to multiply by 3. So if you are paying 500 rupees for one lot of Bank Nifty, then probably you are still under the limit. Still, after your slippages, everything included, you are paying 500 rupees. That is 250 rupees for one side and for buying, and 250 rupees for selling. In that case, you are still saved. But if it is going 5 times of the normal scenario, like if you're paying 830 rupees on both the sides, then probably it could be tough to handle any kind of trading system. A simple trading system, if you're trading any simple trading system, and if you have brokerage or taxes or slippage, everything combines is going to go beyond 830 rupees in Bank Nifty, or 0.05%. Let's talk in percentage terms. If it is going to go beyond 0.05% system, it could be any trading system. It is vulnerable not to generate. It is vulnerable to your portfolio, especially if you are an intraday trader, right? So definitely you have to take care of your brokerage. Definitely your brokerages, slippages is going to affect your trading system performance. So that is what we want to convey from this topic. And so we allocate capital mostly based upon the maximum system drawdown. So if the maximum system drawdown says 18.78%, we don't believe in the percentage terms, especially if your trading size is fixed, right? So in our case, it is fixed trading size. So we don't believe in the percentage terms. We have to believe from the absolute terms. The absolute term says like at any given time you can lose 92,000 rupees out of your 2 lakhs. Means that is approximately 45% of the you can lose 45% of your money at any given time, right? So you have to be mentally prepared to such scenarios when especially your trading systems. Any kind of trading system, this can happen to any kind of trading system, or you have to design a ultra low trading systems where your absolute maximum drawdown should not go below at least, and in a typical scenario it should be, if it is less than 30%, right, it should be one of the finest trading systems in terms of absolute drawdown. Whereas if you're looking to maximum system drawdown, any numbers less than 25 is going to be one of the finest systems, and if it is less than 10, it is one of the superior trading systems in the world, right? Whereas LinTRA is the performance is quite decent, 18.78. Or if you want to bring it down further, one way you can reduce your drawdown is by allocating more capital. Maybe you can bring down the percentage of drawdown just by increasing your capital, right? So instead of 2 lakhs, you can put 2.5 lakhs. So your drawdown could decline again from 18.78% to 13%, which you can mentally afford to trade further, right? So again, your drawdown, the Sharpe ratio, the default Sharpe ratio comes around 2.18%. It tells you how smooth your returns are. A Sharpe ratio tells how smooth your returns are, and if it is greater than 2, means the system is quite smoother. And at 0.02%, you can see the Sharpe ratio deteriorates from 2 to 1.54. And 0.03%, the Sharpe ratio declines to 0.91, and 0.05%, it completely deteriorates, and it's having a negative number. means it is not generating smooth returns, but it is generating smooth losses. Right. So winning ratio, you can see here again, winning ratio deteriorates here. The ideal scenario, it was 43%. Whereas as the brokerage commissions or slippages increases, your winning ratio slowly declines. There is no much drastic downside, but it declines from 43% to 41%, 40%, and 38% here. And consecutive losers remain stable till 0.03%. At 0.05%, it went down to even 20%, 20 times consecutive losers, right? So again, this kind of scenarios are mentally not affordable for a common trader, right? So someone is seeing, many people cannot afford even an 4 or 5 continuous losers. If someone is going to incur in 4 or 5 continuous losers, probably many traders will switch their trading system. They'll think like the trading system is wrong, right? So the trading system is not wrong here, because since you are playing with mathematical models, it doesn't have any brain to predict. It's just a simple model, right? So these are not astrology tools. These are simple models where you can use these tools to manage your risk. So even if you are going to incur 14 continuous losses and you're not going to lose 20-25% of your capital, then still, if you are still in the game, then probably it could be one of the finest trading systems, right? And this is the total brokerage commission slippages generated over a period of 6-7 years, right? So this particular strategy had almost 2,900 trades. It had generated a total transaction, total commissions of 3.9 lakhs, right? Whereas your commission increases, it keeps on, your brokerage keeps on increasing. So eventually you will be penned out. If your brokerage is going to be high or slippage is going to be high, probably you will be paying more to the government and to the markets, right? The markets in the sense in terms of slippages, you'll be end up paying more to others. Rather, if you are having a protective mechanism like the limit orders, you can save those. You can save those money in terms of slippage. You can save a lot of money in terms of slippages. For example, you can see here the difference between 2.01% and 0.02%, right? And if your trading transaction is going to, let's say you're still going to have a slippage and you're going to have a 0.02% of total commissions, you'll be paying up 6.19 lakhs of total brokerages and taxes, right? Whereas if it is going to go more, and most of your revenue will be eaten up by the slippages alone. The slippages alone, it's going to consume more. Or if your brokerage is alone going to, in terms of percentage terms, like 0.01 or 0.02, I'm talking about only the brokerage part, right? If your brokerage alone is going to be in terms of huge percentage terms, then no point of trading any kind of trading systems, right? So probably it has to be within a limit, and you can control only your risk part. So eventually you can avoid paying more to the markets. By avoiding that, in the long run, you can see a better benefit in your trading systems, right? That's what I want to communicate here. And how you can access this LinTRA, right? You can access LinTRA at marketcalls.in/LinTRA, right? So you can go down to the website marketcalls.in LinTRA. You can go to the menu and you can click on LinTRA signals. You will be able to access the scripts, right? You will be able to access the scripts here. And after 3:15, you can see the dashboard goes no trade zone wait, means there are no trades currently running on, right? And in the website, you will not have access to those channels, right? If you have to identify from the colors or alone. If the color is turning green, means from red to green, with this transition means the channel is going above, the candle is now above the channel, right? And also you can see a positional trading system. Probably the time is not enough here to cover positional trading system. Maybe we'll take some other day to cover LinPos, right? So today's topic is only about LinTRA. So you can access both LinTRA and LinPos for the same scripts, and you will have access to all the scripts down here, right? And there are no login protection, no subscription is required for to accessing this setup. And here the data updates every 5 minutes once, means it is not a delayed one. Whenever it is updating in real time, right? So the updating frequency is 5-minute interval. At every 5 minutes interval, the data updates. And in case if you want to access it in real time, you need to have an NinjaTrader 7 software. So NinjaTrader 7 basically you can get from NinjaTrader. You go to ninjatrader.com, you can download the NinjaTrader 7, and you will get a free license as well. License is free of cost, no charges for NinjaTrader. But eventually, if you want to access a NinjaTrader 7 platform, you need to have a market calls global data feed subscription to watch LinTRA in real time, right? So if you want to be if you want to access the LinTRA, right? So in your system, like maybe I can show the NinjaTrader how it looks like, right? So in NinjaTrader, it has an additional features. Maybe I can show here. I'll try to put some link pause so that you'll be able to understand. So it comes out with a dashboard, something like this. Maybe I'll show you a couple of examples. Right, so you can see here the lines indicate that the candle is green, and immediately it plots a green line on top of it. This is where your limit order is supposed to be, and that reference level will be shown here as well. Get ready to buy above 197671. And by moving the candle, now you can see here, once it touched, it automatically the signal arrives. And you also have the functionality to place. You also have the functionality to send an alerts to sound alert, right? So a couple of sound alerts are supported by the NinjaTrader here, and you can also enable your alerts to your smartphone. So which we use push bullet to send an alerts. If you want such facilities, then you need to go to pushbullet.com and get the API key, right? And you enter the API key over here, and then apply it and install the pushbullet app in your machine, and so you'll be able to send alerts to your smartphones or to your browser, right? So in case of browser, you need an pushbullet Chrome app, something like this. You can see here there is a Chrome app over here, which is a pushbullet app, so which can send which can alert you during the market hours. So even if you're moving out of your screen, you can still monitor your positions by sending alerts to your suddenly any buy or sell alerts or any exit alerts, it will be automatically triggered to your smartphone as well, right? And same settings, you will have the ability to switch between intraday and positional, and you can control the market start time or signal start time or signal end time. So probably if you are trading some other markets like MCX or ES Mini, maybe I'll try to put some different markets here. Maybe I'll try to put ES Mini here, so that you can see. I'll disconnect GDFL and I'll try to connect with Kinetic. So Kinetic is where you can get US market data from NinjaTrader. And let me open ES Mini charts. ES Mini 5-minute setup, and so instead of LinTRA, I'll put an positional trading system here. So LinTRA. Okay, so this is LinTRA, and let me put onto positional trading system here. So this is LinTRA. So currently you can see here maybe I can move to the past, right? And press F5 so that I can simulate here. Right? Once the candle turns green, it automatically plays a red color line over there. So red color line over there, and once that red color line touches, immediately you get a signal, right? In real time. In real time, once it is touching that zone, you will get immediately your dashboard turns blue, and the buy signal arrives automatically, and then it starts tracking the dashboard, right? So then it starts tracking the dashboard. And here we go. So this is the current setup which is running on now, and so So this requires you need to have an currently it is in the open beta testing mode, means it is not open to everyone, and it is only for the close community users. Or if you want to watch it in watch it out, you can anytime you can go to marketcalls.in/LinTRA and you can watch it out, right? And in case if you need any subscription contacts, then you can use this link. This is where you can find the pricing. Probably I can mail you those details, and my team will be available there to configure, to support and assist you if you want to practice anything with LinTRA, or if you want to experiment with LinTRA, right? So questions. So otherwise you are very near to the end. I can take some questions right now. Can you show me the backtest report in positional bank nifty in AMI broker? Okay, so in case of positional, probably we use a different parameter data set. So we use a different parameter data set. So we use, instead of 100, we use 60 over here. So that's what my website also using 60 there. So 100 for intraday and 60 for positional. And I'll switch to positional here. So positional. And so I'll make sure that it's 0.01 or point, maybe I can take it as a 0.02, right? So 0.02% brokerage, back test. So this is positional. It's positional, it's generating 26.61% compounded annual returns. And here we go, the equity curve. The equity curve is not smooth, but it generates return. It is not smooth. As per standard, it is still not smooth. Right, so yeah, winning ratio is 40%. Winning ratio is 40%. I guess that answers your question. NinjaTrader platform data feed, how much? Okay, so to answer that question, you can go to premium, right? So from premium, you can catch platform, and then from platform, you have to go to Nimble Data Pro Lite. There are 3 variety of packages comes here. Nimble Data Pro Lite supports both AMI Broker and NinjaTrader. So simultaneously, you can use in your AMI Broker platform as well as in your NinjaTrader platform simultaneously. So here are the charges for different instruments. Okay, so other questions. Which is better, SuperTrend or LinTRA profitability wise? So the super trend generally takes at the close of the candle, right? So it involves a slippage because you have to place a market order. It doesn't involve, you cannot place a limit order at the trailing stop loss levels, right? So you have to place an market order, so that involves slippages. So probably you will end up, instead of 0.01, you'll be end up paying 0.02 or 0.03, means you're paying additional cost to the markets. So again, the performance could deteriorate. So it doesn't have any scope of optimization in LinTRA. See, LinTRA, there is only one parameter here. There is no multiple parameters to optimize. There is only one parameter, which is nothing but the channel period, look back period, which can be optimized if according to your requirement. Yes, that can be optimized. This can be achieved by random trades as well. Okay. See, return is just around 30%. It is not 30% returns, Sachin. It is compounded annual returns. There's a difference between absolute returns and compounded annual returns. I request you to understand what is compounded annual returns, right? Please clarify the difference between AMI Broker and NinjaTrader. Why do we need NinjaTrader? NinjaTrader is a free platform, right? So you can get an you can license at free of cost. So there is no fee involved for getting the trading analysis software. So one of the finest trading software which comes at free of cost, and you have to pay only for the data feed subscription. And NinjaTrader by default doesn't comes with Indian data feed, so you have to configure the data feeds on your own, right? Or otherwise, we have done a couple of videos on NinjaTrader. I request you to go through that in our YouTube channel. Okay. No. Do you recommend this good software? Probably you are asking about NinjaTrader. Yeah, NinjaTrader is one of the finest software. It's recommended to go with that software. Right. So both NinjaTrader and AmiBroker are very professional tools from the retail point of view. Yes, it's recommended. So I guess I try to answer other questions here. The questions. Is AFL available for existing AmiBroker users? At this point of time, we are initially launching with NinjaTrader. Yes, we have plans to launch in AmiBroker as well. Would you be posting this video online? Yes, the video will be is recorded, and probably it will be up and running in another half an hour of time. Probably by 10 o'clock you should see the video running live in YouTube and in our website. Does it support algo trading? You can automate it. You can automate it. Can we backtest results in NinjaTrader? So at this point of time, we are just launching with indicators, but soon it will be coming up with backtesting capability as well. Yes. In the first release, there won't be any backtesting capability results, but over a period of time, probably within a month time, you should be able to backtest. So the upcoming versions will be adding the backtesting skills as well. Does Market Calls provides AmiBroker? No, we don't provide AmiBroker license, right? AmiBroker.com is the only one who is providing the license. No one in India is providing AmiBroker license, for your information. Are the AFL of Ninja available readily on websites? Ravi, the Ninja script will be posted in our website by tomorrow morning, so everyone have access to those Ninja script, right? But from tomorrow onwards. The thing is, if you want to extend, probably by default it comes with an 7 days of trial, and if you want to extend further, then probably you need an data feed subscription from us. I'm using Odin Diet successfully, looking for high tech, much better than Odin. Okay. So intraday is better or positional? So it depends upon what kind of trader you are, Rajiv. It depends upon what kind of trader you are. If intraday trading suits, then you have to go with intraday. If positional suits, you have to go with positional, right? Fine then, I guess. I think we had almost crossed our planned time, so I request you. I'll try to answer the other queries either by email, or you can mail me at rajendran@marketcalls.in. Right. So, or if you want to follow us in our social media channels, you can follow us at Twitter. Our Twitter handle is marketcalls_, whereas the Facebook fan page is Market Calls. So you can ask your questions over there. I'll be there to write to you anytime. Right. So thank you everyone. Thanks for your time. Thank you.